All right, welcome again. This is going to be a fun time. There is some interesting things happened in the market last week. I did not benefit from all of them because I guess I'm going to say greed and my ego, but I did learn some more things from the market that I guess I want to share with you, share with myself, share with you. So the market started here. Just jump into it. This is on the H for the time frame. Go back on the daily. As you can see, the market is clearly bearish. This is low, high. This is a mini low, mini high, but let's ignore that for now. Low, and the market wicked up, so I actually didn't consider this as a lower high either. This was news event, so I didn't pay any attention. But then this is our next low. Just market is bearish clearly because it broke right here, right? Um, Now when I go on the H4, trying to figure out how it is I'm going to benefit from the week's trades. Once it broke here, I was looking for a retest, which was the previous low, where it did the momentum change. So as you can see, this, let me highlight it. Here is where we have the momentum shift, and it started doing this bullish move. Then it dropped after it hit this resistance. It dropped again and broke this. Having broken that, I'm looking for a retest of this area here to be able to make an entry. So if we should highlight it all, the span between here, um, somewhere in that area, I'm looking for a retest for an entry, right? So that was the week before. Now when it broke below, came down and found support here, um, this was a trade I actually marked out. I didn't take. When I saw these 1 week, 2 weeks, I was like, all right, interesting. What's it gonna do? I realized this is on the H4 time frame that this area is now an area of resistance, right? Beautiful area of resistance. And this is an area of support. Mini consolidation on smaller time frames. However, realizing that I am seeing a few wicks, not big wicks, but a few wicks on this area, my inclination is to see if I could get a buy entry. So when I go on the smaller time frame here, you see the push down, push up, found resistance, slightly came back down, and then gave this morning star formation in the same area. So of course, if I was to take this entry on the H1, it would have been a 46 pip stop. So of course I did not take it because I didn't like the risk, right? Even though it would have been I mean, it could have been a 1 to 2, but I didn't like this risk, so I didn't take it. How I saw this though was after I saw the this bearish candle wicked out in the area, I went down to the M30. I saw, which was, it would have been right here, and I went onto the M15 while it was happening, and then I actually saw this doji. When I saw this doji, I was like, this is a nice entry. So let me highlight it, change the color so we can find it. On the M5, bam, 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 bam. This far. Okay, here we go. When I went on the M5, which is actually what I saw, when I saw this morning star formation in this area, I would have then taken this entry right here. And I would still have my stop loss outside of the area, highlighted area, right? And then because my because my inclination is that the market is bearish, I have drawn my Fibonacci from the start to the end, and I would actually look to come out of this trade at the 38.2. Good. So if I go back down to my M5, let me make this a little bigger so we can find it. Right? I'll go back down to the M5, bring it back up so we could see it. This should have been a very, 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 very clean trade. Very clean, very simple. No extra, no fluff. This is a 1 to 8 risk to reward. Um, Barely any drawdown. Well, virtually no drawdown at all. And I could have ridden it out. I could have taken other entries after it broke here, actually. After it broke, Suran gave this candle. I could have taken a second entry, but that would have been fine and that would have been a perfect trade. So again, how I would have gotten into this trade, I guess that's the hard part, or the part that requires most more practice. Um, because these 2 wicks came here, I highlighted the area stretched across. When the bearish candle wicked out in the area, I would then start looking on smaller time frames, starting from um, the M30 all the way down. So having looked at this candle, I highlight it again so we can find it. Yeah, I went down to the M30, saw this pattern on the M30. Well, this pattern is forming on the M30. But if I want to get an extra clean entry because of what I am seeing, um, this this doji right here is what would have been the confirmation for me. And to confirm the doji, so of course I probably have gotten in this trade maybe somewhere in the middle of forming of this candle, but that would be fine too. But again, you may not necessarily get it right on the money, not unless you're doing a buy limit, um, or a buy stop if you're allowing it to pass through. But nevertheless, um, this doji, and I guess when you understand smaller time frames how they move, the doji on the M5, that same doji on the M5 is a morning star. Can I find it? Oh, here it is. Yeah, that same doji on the M5 is a morning star. As you can see, it fully engulfed the previous bearish candle, gave I want to say doji because it's or a spinning top. Yeah, let's say a spinning top for now, and a bullish engulfing candle. This would have been the perfect, perfect, perfect entry. If I was uncertain about that, I could see that this is resistance here. I could have waited for it to push up through this resistance and then give the retest. So I could have taken a trade here, another one here, another one here, and just ride it out if I wanted to. So yeah, that would have been what happened last week. As I say, it's a beautiful, beautiful trade. All right, let's go back. That would have been the first trade, reading it all the way up to the 38.2. Um, that's one. Let me keep this somewhere so I can find it back. Let's remove this. No. Oh, no. Because I'm already expecting it to test this low, which is also the 38.2 retracement. So I'm looking for confluence, things to confirm that the market is actually ready to go bearish. When it started spiking up, so of course I'm taking my entries mainly from the H1. The H4 I use a lot for structure because it looks clean. It's a lot easier to analyze than smaller time frames when I'm trying to understand where the market is going and what to be looking for. So I go on the H1 and I see this massive drop. Didn't come down and hit the area, and then a push up all the way to the 38.2. And this wick is what triggered my instincts that I need to go on a smaller time frame because maybe, just maybe, the market is not ready to go down. This spike was just a spike to clean out the market. They probably made a big buy to be able to capitalize on the sell. These are the big banks or the large traders, people who have money to can move the market, or several banks who could move the market. And so I actually skipped the M30 and I went down to the M15, but I can show you what I did. Saw this wick forming. I was like, okay, cool. Let me delete it. Saw this wick and I said, yes, all right, I want to try and see if I can get in on this trade. So, of course, as soon as this was formed, this candle started forming. So I went on the M15 to see if there's something that I could have benefited from. And surely, this is an engulfing candle that engulfed this pin bar. So pin bars are great, but this is still a bullish pin bar. If I went on the M5, see if I can find it back. Okay. If I went on the M5, you would have seen that this is the pin bar that you saw right here, right? And then this bearish candle. And this candle is where I would have taken my first entry, right? So let me, this is a change in the momentum. My first entry. Yes, this would have still been a 25 pip stop or thereabout. I actually probably would have carried it a little further just to avoid being wicked out. 25 pip stop. Um, then when it broke below here, I mean structure is structure anyway, take it. When it broke below here with pin bar, bearish engulfing, pushed back up and tested the area with this sexy candle, I would have taken a second entry. When it pushed down, and this I think would coincide with a 38.2 retracement if I'm not mistaken. Let's double check. Yep. When it pushed down, gave this small spinning top and a bearish engulfing, I would have taken a second entry. Um, then, if it should push down again, down to here, um, whoops, I would have taken my third entry here. Well, actually, I would have taken the third entry here. This would have been a good railroad entry. Good enough. Yeah, it would be a good entry, but I've probably a more confirmed entry would have been here or even here. Um, I would have, and the plan is to ride it down. So let me go back on the H1 to show you. Oops, didn't work. Oh, yeah. So this is the 38.2. So I'm riding it down to the negative 27. But so here's the big but now. The big but is because I took this trade based on the this fib was drawn from the H4. A lot of things are at play. Now when I go back on the H4, when I going back on the H4 and I see this pin bar that is formed at this support, irrespective of what is happening, I'm jumping out. I, I I'm just jumping out because um, it is a clear enough indicator that the market may be ready to start moving up, right? So this is the second trade, right? Where is it? Okay, this is the first one, second one. All right. Let me now show you how I would have taken my third trade for the week. That's two, right? That's two already. Okay. So something that happened in the previous week caused me to want to look into. Sorry for my bird in the background. To look into what I'm defining as momentum shifts in market structure. When I do previous week's video, I'll share what I found in the previous week. But looking at this one, you see this doji, doji spinning top pin bar. And if I put this on, so let me move it. If you look carefully, very carefully, you can see that this area right here is an area of resistance and support, right? Support, resistance, resistance, push up, resistance, right? Now, when the market broke this resistance, broke through the resistance, pushed up with so this breaking is a shift in the momentum. This bullish candle is indicating a shift in the momentum, especially because we're using other things to prove confluence. So it came down to the area of support, gave a pin bar, and then it broke through. Pushed up, came back down, and tested the previous, excuse me, resistance, now support with this spinning, with this doji candle or spinning top. It looks like a spinning top. I would have then now gone onto this spinning top right here. Let me highlight it. Oops. I would have gone onto this spinning top on the smaller time frames, right? So I would have now looked at the M30, M15, and see how I could benefit from the trade. So this is the spinning top that we saw right here. Market broke down, came back and created a higher low right here with this engulfing candle. This would be the start of this trade for me. And my stop loss would be here, below this low, right? Put it at 20 pips. And I would have been in this trade. Um, right now, if I should have been in this trade, I still would have been in. And my take profit would actually have been here. Based on how it is forming out, I again because so this is a counter trend trade because the market is still very bearish, still very bearish. So this is a counter trend trade based on the H4. So if you look at the H4 again, this is bearish or uh, higher high, lower low, then a lower high here. I can put it here because this is from the H4. Lower low, and now I'm looking for the market to break the previous high. If it breaks the high here, it breaks this high here, the high I'm using as the end of the body. It breaks this high. I'm looking for a retest, and then I'm going to take a buy. Sorry, right? So the retest could be anywhere in the area. If I should use my fib, it would be thereabout. And I would have, this is now a head and shoulders. Head, left shoulder, inverted head and shoulder, right shoulder, and I prefer the inverted or lopsided head and shoulders. It shows that breaking structure. For me, that is better. Um, yeah, and I would still be in this trade. I've taken this trade and kept it for this time. But for now, let us say that this is what the market has done. Let's say I came out right at the money, the end of the week, a little before it closes. That would have been a 1 to 2. Um, and that would have been that week's trade. So let's see what these are 3 trades that I could have taken this week. Let's see what the week would have looked like. So this is 122.6 pips plus 171.9. Get that right? Pips plus 53.1. This has been 347 pips this week on only 3 trades, right? And I'm a very risky trader. Risky is relative. Risky is relative to the person that you are, but I have no issues risking 10 to 20% of my account, and that's just me. Um, so to a lot of people that would be over leveraging because you're not sure your account size and all that jazz, but I have no issues risking 10 to 20% of my account. So yeah, that would have been this week's trade. Um, beautiful, and all it would have been for 3 trades. One here, two here, three here, and all we're doing is watching the structure of the market. We're not trying to take trades that are have broken structure, have chain structure. We're just trading with the trend. And there was one counter trend trade that I took here that I showed you here, but or two for that matter. But this is a counter trend trade here. And so would have been this one. But again, you're still looking for a change of structure or a change in momentum. The structure hasn't changed, but momentum has shifted. And so there's a way to capture the trade at the change of the momentum to be able to take the counter trend trade. And then you're able to now go back onto the regular trend and take the trended trade as well. So that would have been this week's setup. I'm hoping that I know I've benefited from this lesson that I'm teaching myself. Help me to cement what it is that I'm doing, how I'm learning, and yeah, I'm making this available to me. I share it with a few friends, but again, this is not um, for making money right now. Anyway, I'm not making money from this. This is just my personal development to help me to remember what it is that I'm doing, how I should be doing my trades, cementing the things that I know I should be doing to take a certain entry. Um, and just before I close this, there are a few things I'm looking for next week. So if I should be taking sales, again, the market is still bearish. So if I should draw my Fibonacci here to here, it is still bearish, so it could still come and hit the 61.8 and give me a bearish move, and I would write it down to the negative 27 at the very least. That's still one move. It could also come down, so moves here, come here, and hit the wick area that I highlighted, this wick area that I highlighted, and start moving up. Now, this would have been excellent. This would have now been a double bottom. And for this double bottom, I would ride it all the way up to the high, this high. And this area for me is an area of consolidation that I was able to benefit from. But this is the high that would have been in reference for me. So I would have ridden it all the way up to that area. If I go back on the daily, you would also see that this was some news event that I would be able to read it from. I could write it probably a better exit would have been here. Where does this go? Let's see where this ends. Okay, yeah, that been a good. Um, and if I measure it, this would be 300 pips. So this is probably a 3 day trade. My longest trade so far has only been 2 days. I've held that trade for 2 days. But yeah, one more thing that it could do, which is what I said earlier, would be the push up out of this area right here, break, retest, and I ride it all the way up. That I would ride all the way up to that side. Yeah. So I hope this was helpful. I'll definitely re-listen. Um, yeah, and let's have a great week in trading. It's gonna be awesome. It's going to be epic.